Remember that I've always said, I mean, when I say always, for decades I've said, that the stock market is what I call the Great Humiliator, wanting to humiliate as many people as possible, for as many dollars as possible, for as long as possible. Wants to get you, wants to get your spouse, your son, your parents. If you're young enough, wants to get your grandmother. Prefer to get me, because on balance, I'm probably wealthier than most of you. But the wealthier you are, the more it wants to get you. And your job's always to engage the Great Humiliator without getting humiliated by it. And that's not an easy task. It's got a lot of tricks. It knows a lot. It's market savvy because it's the market. One of the things that people always think as geopolitical issues arise is that this should help defense stocks. If the geopolitical issues arise in a conflict, in a spurt, there's a very brief, sharp rise in defense stocks. It typically doesn't last long, and then they underperform, and in not too long, they usually underperform from the beginning of the conflict. That's basically what's happened this time with the Iranian conflict. It's been archetypally normal. Now, let me say this differently. There is a tremendous knee-jerk reaction that people have when a military conflict begins to say, boy, I ought to buy defense stocks. This is the Great Humiliator offering you a head fake. The fact is, if in the long term defense stocks should be good, they should be good whether there's a conflict or not. The thing that really impacts defense stocks is there a future unexpected material increase, not just in the United States, but on a much broader basis in the world, in defense spending. And sometimes people talk about that and it happens. Sometimes people talk about that and it doesn't happen. Sometimes people don't talk about that at all. But it's the actual increase in defense spending that is a surprise, above and beyond what had been previously expected, which is what would actually make sustained rise in defense stocks, not the notion of some war that comes along that doesn't last too long, that blows up some stuff. Remember, I point out that when it comes to the United States of America, the most powerful military in the world by far, we're blowing up stuff of ours in training all the time. We actually have a lot more people dying, a lot more people dying every single year in the United States in training activities than we have even gotten close to in this Iranian conflict. I mean, by a couple orders of magnitude. So the fact of the matter is that this war really doesn't cost as much as people think it does, because the training activities that normally go on don't really need to go on when we're doing this, because this is real-time training. It's regrettable, tragic, has all kinds of negative consequences for anyone that it injures. But the fact is, it really doesn't have the big, huge impact on future expenditures that people think it has, because a lot of that would have happened anyway in training activities, in terms of munitions explosion, in terms of things destroyed, in terms of accidents that happen, in terms of just unfortunate circumstances. Our training with the United States military is very much as if you were simulating actual conflict. So thank you for listening to me, but I'm just going to tell you, defense stocks don't react the way so many people hope they will when there's the beginnings of a conflict. I hope you found this educational and useful, and I hope you'll be interested in listening to other videos that I render over time. Thank you much.
Hi, this is Ken Fisher. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.